Okay, it's Wednesday morning on the 11th of February 2015. This is your executive summary. So yesterday the markets closed up. We've pushed through this resistance line, bouncing off the support on the 9-day moving average. You can see the market, as in the S&P 500, closed well in its top half of the range. So this indicates a momentum-based market respecting the open range close printed on the first trading day of the month. So what can we expect tomorrow? Probably a test of this previous kind of resistance of that candle here. So I would expect a bullish market in the morning, resulting in a sell-off towards the end of the day as profits are taken. A test of this support level towards the end of the day is probably what I would expect. So a good opportunity to take profits on existing long positions, and potentially an opportunity to get into entry points on momentum plays you're waiting to pull back. Now, in terms of a couple of long positions I found in the scans this evening, or last night, IDTI was one. And this is something that has been building with momentum for a while. You can see these higher lows, higher highs being printed. Very bullish candle yesterday, hammer candle printing. Not a lot of room for profit, but for those who'd like to scalp positions, you can see that yesterday and the day before we pulled back to the 9-day and the 5-day exponential moving average. So I wouldn't expect it, if it's bullish, to do the same and pull all the way back to the 9. So the 9 days at 1973. So I'll be looking to try and scalp a position at 1983 and sell it at $20.57. So that's a pop up. The high of this candle back here was $20.79. So in case the market turns bearish, we have to pre-plan for a lower high, which is why I'm looking at that lower target. I put a stop loss in that at 1947. Now, the other one is SNDK, ScanDisk, which was actually something we were looking on the short side only a couple of weeks ago. But this has got some fairly bullish tendencies on the breakout scenario. We have a consolidation here on 3.16 million shares. On Tuesday, 3.6 million shares to the upside, breaking the squeeze of the 9-day and 50-day moving average. Now, you can see that this could potentially lead to a pop. Again, trying to be conservative about this, I'm looking for an entry at 78.60 with a pop up to 84.03. So we're looking at basically up to that level here, which is the high of this candle was 83.90, the high of that candle was 86.95. So basically kind of popping into that area. In fact, if we actually go even a little bit, looking at that again, looking conservatively on that, I'd look at the high of the 83.90. I go 83.83. Just to give it a little bit more room for the potential for pullback. So again, looking for the high of 83.83 as a target. Now, could this go further? Of course. But in these markets, we're dealing with a quite a volatile, noisy market, and we want to, well, at least I want to try and be a little bit planned for that potential for higher levels of drawdown and pullbacks. Now, the final one on the list that I was looking at is Angies List, and it's not my favorite. It does look very bullish, but the problem is trying to get the risk-reward ratio right. So looking at this trade, you can see that it's, like the other ones we looked at, has been able to kind of balance itself out here on a consolidation level, break through the resistance level. It just popped through yesterday on 498,000 volume, ahead of 404 the day before. Now, if it continues to rally, this could go all the way up to its moving average up here. But considering the market conditions, I'd be looking for an ideal sell from, like buying in at 513 and getting out at 537. So that gives an opportunity of reward of 24 cents upside. Now, in order to put a stop loss at an appropriate place, I'd be looking at 493. So we're dealing with basically 20 cents on the downside for marginally more on the upside. And that's why this isn't necessarily an ideal trade. But if you feel confident about the company, you think it's going to steam through, this does have the makings of a momentum trade in the beginning stages. And if this was to continue up and break the high of Tuesday's candle, there's plenty of good arguments that would suggest it's going to get as high as this kind of previous support level, as well as where that moving average is coming into play. So on the aggressive side, in terms of being speculative, it could get all the way up to, say, 597, I think. But so if it were to do that, the risk would justify the reward, or vice versa. And that's the way I'd be looking at that, is coinciding this previous resistance level with where we're kind of building from now. Of course, we can always throw the Fibonacci retracement levels on to confirm our theory, and you'll see that the 61.8 Fibonacci is indeed at 597, which is what we just talked about. So running up to that level is where I would put my best case scenario expectations on, and that makes the third for the list. Hope that helps. Happy trading tomorrow, and keep safe.